Good morning, everybody. Hope you guys can hear me okay, and hope you're doing well. I think it's going to be a very busy day today, quite frankly, in the markets. So we can get started here in just a second. All right. Excellent. Very good. All right, let's get started. Good morning. Serge Berger here from thesteadytrader.com. Hope you're doing well. This is our Set the Market morning call. Going to take about 10 to 15 minutes here this morning to go through the most important things on our notepad. And I'd like to start off with the trend. So, at the core of our process looking at the markets is to make sure we get the trends right in the big picture. And so what you're looking at here on your screen is what's called our market rover, and I've pulled up the NASDAQ 100 because that's for most people one of the more important benchmarks right now because most retail investors are really invested in equities. And so I just want to show you how accurate this thing is in telling us when a trend starts and when a trend ends. So if you look at, for example, the bull market in 2020 started in April. That's when the background color turned green. We got a live email on that by the software. And then that bull market ended in February 2022. If all I did is buy there and sell where the background color goes to black, I would have made 85%, right? Then it kept us out of this entire chop from February 22 until April of 2023. Okay, so the entire bear market could have been avoided, right? So that's really, really important. And there was even a time to be short in the red period. Then it was time to buy. Again, the background color in real time turned green. Sends us an email in April of 2023, and that trend ended in early March for a 50% gain. So if all you did is buy the NASDAQ 100 in April of 2020, sold it when the trend following software very clearly told us in real time in January 22, or actually, early January 22, and then bought it again in May 23 and got out a few weeks ago in early March, you'd probably be beating most investors. The problem is most people don't do that because most people don't, have too much of a gambling gene and don't respect the trend. So I just wanted to kind of show you this. Now, of course, the question is, where does it leave us now? So if someone didn't heed the call and get out, right, very clearly, where the algorithm told us to get out, basically in early March, what now? Well, there still is an opportunity to get out this is from an investment perspective. Remember, all this here is educational. None of this is meant to be investment advice. We do think the markets are getting oversold. And so what I'm showing you here, and I posted this morning in the Trade Ops channel and our members areas, this is the S&P 500 on a weekly chart. This is a multi-year weekly chart. You can see it stretches all the way back to COVID. And we've had a very sharp cascading sell-off, as you've probably witnessed over the past week. And it's brought us back into essentially a confluence area of support. Not only is this confluence area support from the COVID trend line, that's this orange trend line down here, but also we're now retesting what used to be resistance in January 22, and then finally was broken above a year and a quarter ago. So I think from a sort of counter trend bounce perspective, this is probably a pretty good spot to get a bounce. Now, does that bounce have to happen today right away, or can it take another few days to start working? I don't know. I think now is as good a time as any. Obviously, there's a lot of tape bombs and meaning headlines that are going to not make this a linear move. But I think this is an interesting spot. And if you are a Inner Circle member, we're going to send out a trade alert, I think just about now. by email specifically how to structure this trade. Now, there's a couple other things here that are really important to understand. When we take this into context, and this is actually something I found this morning on X, on Twitter, and if you go back all the way to the Black Friday, which was in October 1987, there were only 10 other periods, 4, 5, 6, 7, 10 other periods where the S&P 500 had a 3-day stretch that was either roughly equal to, or maybe a little bit more, or actually a lot more potentially. Black Friday was the one anomaly, right? So from that perspective, we're probably due for some sort of a consolidation period, call it a bounce, as well. So I'm just trying to give you a little bit of statistics here and kind of how all this ties in. And then the other thing I want to show you is that this is also lining up with all sorts of other asset classes out there. The NASDAQ 100, I just showed you that one, how that's looking. I posted a chart of silver for our clients earlier this morning, which I will quickly show you here. If I can bring it up here. Here is the chart of silver. Because what ends up happening, and I mentioned this yesterday in our Set the Morning call here, is that when people have to de-lever, when they get margin calls, then the correlation essentially goes to 1 of all assets, of risk assets. And so the price of silver too, you can see, is now at a pretty critical spot if we take the same time frame that we just looked at for the S&P 500. And again, this is a weekly chart going back to COVID, or the COVID period. And so I do think there's a lot of support here for these kind of things to bounce. Whether silver, goes off to the races from here or just consolidates more, I don't know. I would argue maybe a bit of a bounce and then it consolidates. I don't think it's going to, make all-time highs anytime soon here, because we do need sort of, past the recession fears, or at least the market looking through that. And I don't think we're there yet. I think we're just kind of at the beginning of all of that. So those are two things. So that's kind of, if you will, a trade idea on silver, a trade idea on the S&P 500. Again, if you are an Inner Circle member, you'll receive an email on that. Specifically, we like the idea of being long for a bounce here. And that's, again, historically speaking, would have had a good chance of making money. I'll also show you another stock here that I actually posted over the weekend, I believe. And this is have you guys ever heard of Novo Nordisk? Novo, NVO is the ticker symbol. I'm going to quickly the US ticker. That's the ticker in Denmark, the main one. But I'll show you NVO. So what's really interesting here is that this stock is actually, and they make these do they make the Ozempic drug? Yeah, exactly. So this is a company, just, I know everyone knows it just now from this Ozempic drug, but here's a little thing about this stock that you may want to be aware of. And I'm just trying to give you some information here that I am talking about with some family offices. So here is a monthly chart of Novo Nordisk going back to 1987, okay? And there is literally right here, right now, where the stock is right now, a trend line of support that dates back to 1987, basically, if you will, right? That's a long time. And in fact, the stock has been in a trading range, and it's now at the low end of that trading range. So every single time that this stock has gotten to low end of the trading range, all the way back down in the 80s, it has essentially found support. Doesn't mean it has to go right back to all-time highs. I don't think that's the case either. But this is pretty interesting. You throw on top of that some fundamentals, and I understand there's some headlines out there about, the government no longer wanting to pay for this stuff. I get all that. That's why the stock is down severely. By the way, again, if you don't have the market rover, you got to get with this thing, because guess what the market rover told us? Okay, market rover told us pretty damn clearly to get out of that damn stock. Right? So look at this. So you talk about trend changes, right? So Novo Nordisk became a bullish trend in January of 23. It then rallied 130%. And when it was up still 84%, it finally told us the trend is over. I'm going to guarantee you right now that the vast majority of people that bought this stock did not get out at 115, 120 bucks. They still own it, and the stock since then is down 50%, right? So if you have a portfolio, which the vast majority of you do, and you don't have something to track trends algorithmically without emotion, you got to get with it, because there's a real risk here of you blowing up your entire net worth. I know I keep saying this. I know almost no one listens to it, but I have very detailed conversations. I've been having them for 9 months with big pension funds, family office, hedge funds. I don't think people are understanding how different this environment is going to be. Not that the stock market's going to collapse, but that a lot of the things that have worked, the portfolios that have worked for the past decade, are probably not going to be working anymore. And that happens every decade and a half. So we're right on line with that sort of in that sort of time frame. So are there any stocks, anything individual that you guys want to look at real quick? I'm going to skip on over to our Market Rover member session here in just a few minutes. But in the meantime, again, if you guys have any specific stocks you want to look at, one thing we're going to focus here in the trade ops area, members area, is we are going to be looking at, there's a lot of opportunity here in the market intraday. So for example, yesterday we had some beautiful gap closing activity taking place. You can see yesterday's gap, which is this is the down gap from yesterday. We then we did it in real time in the members area. We ended up buying the NASDAQ 100, and you can see it rallied like 5%, which is crazy intraday. So that's it. That's that. All right. Bob wants to look at DJT. They report tomorrow. Okay. Well, so first of all, if some, okay, gosh, I don't know. I have no clue about this stock. Look, if there is probably other stuff that is a bit higher probability. That's a difficult trade. I really have no comment. I'm sorry, Bob. I just don't think. I mean, that is one of the more difficult trades, and I don't know. I really don't know. If this is the ticker you want, I'm sorry. I just don't know. I don't even know what to say on this. Like, there are so many easier trades than DJT. So I would focus on something else. But I have nothing to say on that. But thanks. I appreciate the ticker. And then Sony wants to look at OKLO. Again, I don't know the company, but I would say, so again, I don't know the company. I would have to give you some fundamentals and do some research on it. But I would say if all you're looking at is for a trade, and I don't know what your time frame is, Sonia, so that would always help if you guys give me a time frame. I would argue there is an oversold bounce here too that could happen. This is purely technical, superficial here, but here too, I would probably say. And then Alibaba, look, we are very constructive China going forward. We don't think this story is over. We think Alibaba is probably going to be more of a buy than a sell here. So we got it in bullish trends. So what ends up happening when the market goes into a risk-off period, then you are going to be in a situation where the correlation in the market goes to like 1, meaning like everything gets sold off at the same time, like I mentioned before. And you can see that we're gonna do our Inner Circle Market Rover member session here in about 5 minutes, and I'm gonna show people the correlation of the NASDAQ one of the MAC 7 stocks to the broad market, which is something we've been talking about tirelessly here for the past year or 2 years. So MSTX real quick, and then Netflix, and then I have got to go MSTX. Oh my God. Okay, so first of all, if you're looking at MSTX, you have got to look at the actual underlying stock, which is MSTR, right? MSTR, it's actually holding up very well. Would I necessarily touch it here? No, it's a correlation trade to Bitcoin. So you need to see when Bitcoin is bullish or bearish. Right now, Bitcoin is in a neutral trend. Again, this is what the market rover tells us very clearly. So unless you know what the trend is, you can't possibly really do a trade. So the market rover tells us that Bitcoin is currently in a neutral trend. So there's really nothing to do from a trending perspective, and from a trading perspective, near term, it's actually very choppy. So I wouldn't touch it. We have our weekly Bitcoin bracket email that goes out every Monday. If you guys want to sign up, make sure you just get with Joel or just email support@thesteadytrader.com. The VIX, as I mentioned extensively over the past couple of days, I think when you get to when you get to a situation where the VIX is in the 60s, it's going to mean revert a little bit. So that's kind of where we're at on the VIX. You know, it doesn't typically stay up at 60 very long. And then last but not least, quickly look at Netflix this is for Narcisse Fatso. Netflix is look again, good. So that's a good one to look at as well. So what you're looking at with Netflix is a stock that is most likely going to hold up a little bit better than some other things in the Max 7 space. And that's largely because it's become a bit of a consumer discretionary thing. A consumer staples thing. But I would argue if the broader market's going to bounce here, Netflix can easily bounce a bit here. So it gets a correlation trade. If you look at the correlation of something like Netflix to, let's say, like the S&P 500, you would see it's all the same trade. So it's all the same trade if you look at it from a correlation perspective, right? So you can see that directionally it all moves in together, right? So when the S&P goes down, Bitcoin and Netflix goes down, and so on and so forth. So what you want to do is you want to be getting a handle on right now it's about beta, right? You need to right now make sure you understand what the broader, so there was just a headline just now, President Trump having a call with South Korea. We're in a very headline driven, broad market based environment. That's why it's such a great trading environment. So if you're not trading and you thought you were a trader for the past decade, you probably weren't a trader to begin with, because like right now is a trading environment. And so you need to get a handle on the S&P, which is why the first chart that I showed you before is this one, which to me tells me that the S&P is oversold and that we could see a bounce. I don't know how long that bounce lasts, a few days, a few weeks, I don't know. I wouldn't be surprised we get in the mid 500s. That's possible. Again, we're going to go into more detail that over in the members area. So thanks all for being here. We'll be back here tomorrow morning at 9 o'clock Eastern. Please, very important, please give us a thumbs up, and please subscribe to the channel. Tell anyone you possibly can about our morning show. It's going to get better by the week. We've got some great plans. We're going to start having guests as well. And if you are a TradeOps member, we'll see you in about 15, 20 minutes over there. And all of you guys that are Market Rover Inner Circle members, we're going to see you in about 1 minute over in our members webinar over there right now. So thanks for being here. Please subscribe. Please give us a thumbs up, please share it to anyone so we can continue doing this. If you appreciate this, if you like it, please share it. Thanks so much. See you guys back here tomorrow. Take care.